The chance to get rich is here, folks, and we're running out of time. You're gonna see it soon enough. Everybody with a bit of cash in their pocket is scrambling right now, moving their money around like crazy. This could very well be the nastiest financial crash we've ever seen. If you're not keeping up with the finance news, you might not know yet, but those stocks that were killing it last year are the ones you could have bought blind and made bank on. They're tanking hard now. Take NVDA, the big dog in the industry, it's down 28%. Tesla? Man, it was flying high last July thanks to Trump's policies, but now it's crashed 46%. The giants like Amazon, Facebook, Google, you name it, they've all dropped at least 15% or more. This kind of dip has got investors freaking out, questioning everything. But what if this is just the start? What if the market keeps sliding? In just one night, a ton of folks using leverage could lose it all. They'll have to dump their assets to cut losses, and that'll trigger a global meltdown. At that point, it's not just a dip, it's a total collapse. We've seen this before in 2000, 2008, 2020, and it's looking like it's about to happen again. But here's the kicker. The scariest part isn't the market crashing. It's that this is exactly what the US government wants to happen. Why? Because when the economy tanks, the whole world ends up paying for America's mess. Yo, what's good? Everybody not here. You notice how the Atlanta Fed, one of the Federal Reserve's branches, said first quarter GDP was gonna grow to 0.3%. Then last month, they flipped the script and said it's down to negative 1.5%. What's that mean? They're straight up admitting the US is in a recession. A few days later, they tweaked the numbers again. Now it's negative to 0.8%. What's that tell you? Not only is the US in a recession, it's way worse than they thought. So when Trump got elected, the stock market went nuts, right? But once he's in office, it's gonna nosedive. Calling a recession is super touchy in a lot of places, but even the US government's owning up to it now. All the official economic data is screaming that things are going south. Lately, I've been feeling like my grandparents, glued to the TV watching stock market news from 15 years ago, obsessing over every move Trump makes to figure out what he's gonna do to the markets. Remember a few years back, 5 years ago, when Trump would drop one tweet and the market would lose its mind? He was all about printing money to juice the economy, and it worked. Markets were booming. But this time, dude's not saying a word about stocks. Why is that? I was about to turn off the TV when the Treasury Secretary pops up and says the government's big goal right now is to keep long-term Treasury bond rates from spiking to high. In plain English, they're desperate to make sure US bonds still sell. What's that mean? Check this chart out. It shows how much cash the Federal Reserve's got left. Spoiler, since 2022, their wallet's been shrinking fast. So what's their next move? They're gonna borrow from the rich. The Fed's putting up US Treasury bonds as collateral, begging financial institutions and big shots to loan them cash. It's called a reverse repo, basically, the Fed borrowing from its own system. Look at this chart again. The higher that green line goes, the more bonds they're pawning off to get money. In other words, they're maxing out their borrowing limit. But here's the twist. That green line's about to hit zero this month. That means even the Federal Reserve can't get loans from their own financial institutions. There's only two reasons for that. One, those institutions are flat broke. And if they're broke, how are they supposed to lend to the Fed? Two, even if they've got cash, they'd rather sit on it than take the Treasury bonds the Fed's offering. So who's buying US Treasury bonds then? Right now, the Fed's piggy bank is pretty much empty, and they can't borrow. Big investors and financial institutions either don't have the money, or, if they do, they're not touching US Treasury bonds. Meanwhile, countries like China, Japan, the UK, they've been dumping US bonds left and right for years. That means US bonds are running dry on liquidity. In other words, they're not moving in the market like they used to. Why? Because more and more people want to sell and fewer want to buy. That's why Trump's finance guy is saying their #1 job is to make sure long-term US Treasury bonds still get sold. Their fix? Simple, make America great again. Like, the government's gonna start slashing jobs. Big companies are laying off workers to jack up unemployment rates. Then they'll hike tariffs to spark more inflation in the US. Most importantly, they'll slap sanctions on the whole world. Maybe even trigger a financial crisis or a recession on purpose. First, you tear it all down, then you rebuild. That's their plan to make America great again. But for us, this ain't the time to sleep on a good crisis. When most countries can't escape this spiral, cash is gonna flow to safe havens, the assets we've already got lined up. This is our shot, not just to protect our money, but to create a whole new wave of wealthy folks. If you don't want to be a victim of this crash and actually want to climb to a higher economic level, stick with my channel. I'll keep dropping the key info you need. And if you're worried you'll forget all this, hit that like button. It'll save the video to your playlist so you can rewatch it anytime. Now here's the big question. Why are US bonds running out of juice? Can't the US just use its own money to pay off debt? Nope, it's not that easy. The US dollar can't be clawed back. What's that mean? Listen up, US Treasury bonds are basically a cycle of borrowing, spending, collecting, and paying. Back in the day, the Fed could print $5 trillion, use it to buy US Treasury bonds, basically lending it to the government. The government would owe the Fed $5 trillion, then spend it buying stuff from all over the world, importing everything. Once that $5 trillion gone, the government's broke. So what's next? Here's where the big brains come in with a plan. The US dropped $5 trillion globally. If they can pull back for $1 trillion, that leaves just $1 trillion out there, starving the world of cash. Then other countries have no choice but to keep selling stuff to the US to get dollars. At that point, I can keep printing money to buy up everything the world's got, right? How do I get back the money I spent? Easy, I borrow it from them. I sell US Treasury bonds and say, loan the US government some cash. When we make bank, we'll pay you back with interest. That means countries sell goods to the US, make money, then invest it right back into the US. Americans are basically working to pay off their debt for them. End result, the whole world uses some of its earnings to buy US Treasury bonds. The Fed prints $5 trillion, the government spends it, then sells bonds to pull back for $1 trillion. That keeps the world from swimming into many dollars, so the Fed can print another $5 trillion to loan to the government. The government spends again, sells more bonds, prints more money. You get the picture. In short, US Treasury bonds are how America sucks money back from the world. Their goal: do nothing and still use printed cash to buy everything the world makes. So the US government owing $36 trillion or even $100 trillion, $1 quadrillion ain't a problem. As long as about 40% of that debt comes from other countries lending to the US, the system keeps chugging along. Bottom line, as long as the US can grab back the money it spent, keep the world desperate for dollars, and make dollars the go-to for trade, they can keep printing with no issues. In theory, if they keep collecting bond debt, they might not even have to pay it back. They just use new debt to cover old debt. Like, say the US owes Japan $1 trillion and it's due. They'll ask Japan, want to keep lending? I'll keep paying interest. If Japan's cool with it, the US doesn't have to cough up the principal. If Japan says no, the US borrows $1 trillion from the UK to pay Japan, then figures out how to pay the UK in 3 years. That's their game plan, buying time or straight up stalling. By dragging things out, the US dodges the pressure to pay right away. They don't teach this in school, where folks think debt's gotta be paid ASAP. Truth is, you can delay it, even pass it off to someone else. But if the world sells stuff to the US, makes dollars, and doesn't use the cash to buy US Treasury bonds or lend to the US, America can't get its money back. Then they can't keep printing. Without printing, They have to gas work and produce stuff to pay off debt. That's what's happening with US bonds running dry, and that's the deal right now. Before, about 40 to 50% of US debt was from other countries lending, not anymore. Now, only like 20 to 30% of what the US owes comes from foreign loans. That means the money they spent ain't coming back. When the cash doesn't return, the world's not short on dollars anymore. If the US keeps printing at this point, the dollar's gonna tank hard, and nobody's gonna want it or US bonds. That makes getting money back even tougher. So what's the move? Some folks say Trump's hustling to raise cash to pay debt, like jacking up import taxes or get this selling US citizenship. Drop $5 million and you're an American citizen ready to move in. Talk about an international joke. Like I said before, the US doesn't need to pay its debt and it can't. If they actually paid it off, the whole global financial system would crash instantly. Why picture Trump pulling money back from everywhere, getting cash flowing into the US? But if he uses it to pay debt, that money's yanked out of the system again. Plus, the Fed's the biggest lender to the government. They printed money and loaned it out. If the government pays that back, it's like burning the cash it's gone from the system. So why'd the US print money in the first place? Because working for it's too hard. They print, sell bonds, collect cash, and print again. If they stop selling bonds and try to pay debt, they can't print anymore. So no, they don't need to pay it back. Why would they? If they shrink their debt, they'll wreck themselves. If they pull in $100 million and use it to pay debt they didn't need to pay, they're broke. When the US runs out of money, it's not just the stock market crashing, Wall Street's done, no liquidity. Nobody's got cash, businesses got no customers, and the economy grinds to a halt. Then you get that dream scenario some folks talk about. Houses in prime US spots dropping to $100 a pop because the economy's in deflation. But by then, most people's assets are worth $1, and banks ain't lending for houses. So even if prices crash, your assets crash too. Most folks will still think houses are too pricey and can't buy them. Don't think the US paying debt and causing deflation's a win. It just means US assets get sold off cheap and Americans get poorer. So let's be real, no US president's got the guts to actually pay off the national debt. Paying debt is just a soundbite for the TV crowd. The government's real job is to keep control of money printing, pull cash back from the world, and keep cranking out dollars, aka piling on more debt. The more debt they got, the more money they print, and the less the dollar's worth. Pumping cash into the market needs assets to soak it up, or you get runaway inflation, and asset prices go through the roof. So what's the edge for small-time investors like us compared to big dogs like Warren Buffett? We're nimble. Buffett's got a plan a year out to buy or sell. US, we just wait for that moment when cash floods in, stocks spike, and we jump in not too late. Big players set the trends, we ride them, cash out, and bounce. Listen up now, this part's key, or you'll miss the big stuff coming. Right now, the US can't pull money back because the world's done lending to him. No cash coming in means no more printing. So what do? Easy, something we've all dealt with, jack up borrowing rates. If you lent me $1 million before and I paid you $10,000 interest, but you're not lending anymore, now I'll pay $50,000 to sweeten the deal. That's how the US sucked cash back from everywhere. But here's the catch. Most folks are only buying short-term US bonds. Long-term ones, nobody's touching them. Plus, when they see the US market popping off, people pile in to speculate, pushing prices higher. Want to dig deeper? Go check out my last video from Monday. Every week's got a new one, and they all tie together. Point is, the US grabbed all the dollars back from the world, but that cash didn't go to the government, it poured into the stock market, straight to America's capitalists. Like I said earlier, the US uses government bonds to pull in global cash without paying it back right away. They borrow for 3 years, use that to pay off short-term debts coming due, long-term loans to cover short-term ones. But now, short-term bonds still got buyers, but long-term ones? Nada, nobody's lending to the US for 3 years anymore, so their whole borrow long to pay short game's falling apart. When that system crashes, the US is stuck paying short-term debts with high interest. Like in 2025, they got about $8 trillion in debt due, plus they need another $2 trillion in new loans. But their treasuries only got like $600 billion. That ain't even enough for regular spending, let alone debt. No money to pay means they could print more, but like I said, if they print before collecting, the dollar's toast worthless paper. So what's the US gonna do? Here's the deal. The Treasury Secretary says their top priority is selling long-term bonds. What's that about? Back when I brought this up, people laughed, said I was fear-mongering. But now Wall Street's top dogs are saying the same thing I did. Traders in the US are bracing for a stock market crash so they can shift cash to long-term bonds. Why? Because if the US wants to keep printing without paying debt, there's one way. Force the money in the stock market to flow into long-term bonds. How do they pull that off? One of the Fed's branches just said US GDP's gonna shrink. Plus, all the recent US economic data's showing we're already in a recession. Why is that? Say you're running a business in the US, Trump's tariffs jack up your import costs. You gotta raise prices, but then Americans can't afford your stuff. Inventory piles up and your business is staring at bankruptcy. If you're still hanging on, congrats. But then Trump starts deporting undocumented workers and you lose your cheap labor. Now you gotta hire American workers and your payroll shoots up big time. If you're still in the game because you're working with the government, thinking government contracts are a sure thing, bad news. Trump's also talking about cutting $1 trillion in government spending. At that point, you're done and gotta look for a public sector job. But just when you think you've got a steady gig, Trump says he's firing tens of thousands of government workers to save cash. So you try big companies like Amazon, Facebook, but they're all slashing jobs too. End result, even the best of the best are out of work in droves. What about your mortgage, your car loan? If you're jobless with no income, how are you paying that? Right now, credit card defaults in the US are hitting 2008 crisis levels. So yeah, Trump's shouting about making America great again, but everything he's doing is actually pushing the US into a recession. Why? It's simple. The US is spinning this recession narrative, saying even the world's strongest economy is going down. That means no investment's really worth it anymore. You're gonna lose money no matter where you put it. In that kind of high-risk environment, US government bonds are looking pretty sweet with their high, steady interest rates. So you better move your money into US bonds fast. And not just any bonds, long-term ones, because rates are at 4 to 5% right now. By now, and you lock in that rate for 3 years. Wait too long, and when everyone else jumps in, rates will drop, bonds will cost more, and you're paying extra to get in later. That's why people are racing to grab long-term US bonds. So here's what could happen: 3 scenarios. First, the dream outcome: US bonds sell like hotcakes and the stock market doesn't crash. If that happens, cool, no issues. But like I said before, bonds and stocks are like a seesaw. Money goes to bonds, stocks lose out. Right now, the cash needed to prop up US bonds is massive. To keep things balanced, stocks would have to slide slowly over a long time, with cash constantly pumped in to soften the fall. But that's not super likely. Second, the one we talk about most, and it's more probable, US bonds go through the roof because everybody's buying, but the stock market crashes hard, like it did in 2000, 2008, and 2020. Then the US can pull in cash from bonds, letting the Fed print more money, no problem. That printed cash gets loaned to financial firms at basically zero interest, so they can scoop up cheap stocks and pump the market back up. That's why Warren Buffett and the big finance players are sitting on piles of cash. Whether it's scenario 1 or 2, stocks are dropping first. Third, the absolute worst case, the stock market tanks, but the money doesn't flow to US bonds, so both bonds and stocks crash. Then the US economy's really in a recession, and it's gonna drag on. Why? If those bonds don't sell, the government can't get cash back, so they can't print to save the market. If they print anyway, stocks might bounce, but the dollar's value will plummet. Like, say you make 30% profit on US stocks, but the dollar drops 40%, you're still down 10%. That'd be a huge shock, because tons of countries are holding big stacks of dollars. If dollar-priced assets crash hard, the whole global economy's in trouble, kicking off a worldwide crisis. So why is Trump doing stuff that's hurting the US economy? He's basically holding a knife to the world's throat, saying, buy our bonds, and it's all good. Keep saying no, and when we go down, you're coming with us. If a financial crisis spreads globally, what happens? Other countries will have to save the US before they save themselves. Think back to 2008, it started in the US, spread everywhere, but the US bounced back fastest. America's still America, you know? But let me say this again. If you get how the market works, you're not just making money, you're making it faster than ever before. Some of you might be thinking I'm full of it. Honestly, I don't blame you, maybe you're new here, but at least go watch my older videos. I'm not out to prove anything or brag, I just want to put you onto the risks out there and the opportunities we investors are seeing. I'm hoping my little bit of influence can help some of you dodge this crisis. And one more thing, back in 2008, a lot of folks were just construction workers or waiters at hot pot joints. Now, a bunch of them are filthy rich, living right around me. After 2008, the wealth gap got locked in. Those waiters, they don't do jack now, their money keeps making money, pulling in more in a month or an hour than most folks see in a lifetime. I was born too late for that one, too young to jump in. But this time, the chance might be back, and I'm grown now. If it really comes, I'm ready, I've rolled up my sleeves. And if it doesn't, no biggie, we just tweak the plan. Going forward, we're keeping an eye on the US bond market. But this ain't a long-term play, it's short-term, speculative stuff. Like I said, if US bonds get saved, the government can keep printing and bond price will climb higher. But if they can't save it, then what? So our strategies hit and run, make a profit and get out, guerrilla style. If anything in today's video is not clicking, go back and watch my last 2 or 3 Monday videos, my whole logic's connected tight. Markets have been wild lately, but I'm out of time, so I'll wrap it here. I'm dropping free knowledge on how to get rich, be an entrepreneur, and invest to hit financial freedom. Don't want to miss it, follow my channel, turn on notifications, and share this video with everybody. Big shout out to everyone who liked this video, wishing you all financial freedom ASAP. If you found even 1 or 2 lines in here that help level up your life, I'm good, that's enough for me.